I keep running through my head right now, like the difference in the conversation of what was the higher low versus what price levels or what price area traded the most volume. Like, where was the biggest commitment made versus what was the high and low? Because, like you said, everybody's been trained to to use the previous high or low or whatnot, and not really even looking at all or considering what price within that candle matters. Not just because it was the high or the low. Like I used the example before, that high could be 100 shares or one contract, and that's it. And like I'm obviously physically visualizing right now a volume, your terminology, volume cluster. That's a major difference from a random high or low that could have been one trade, and giving it massive significance. That's the part that's really got me the most tongue-tied right now. How much significance we give the high or low without knowing if anybody actually committed real money there.
Well, you're exactly right, and I'll tell you where you can take that concept even deeper, and we'd probably have to do it on another call. But I want you to think about the fact that 99% of the indicators out there that have been programmed and sold for thousands of dollars, and some are obviously free on all kinds of websites, but if you were to go and look at the calculations for almost any technical indicator out there, they're all based off of the close price. Maybe they're based off of the high or low price, right? So for some reason, we've absorbed this idea that because the last 7 close prices are the close prices, they're somehow important. But in reality, it's just some point in time, right? It doesn't mean anything. It's not where there was a huge concentration or a breakout or a huge struggle. It just happens to be some point on the chart that we've decided, because we manage things in time, that at that moment in time it was important. Now that might be true for the close of a session of an entire day or the last trading day of the month or something like that. But realistically, in intraday trading, what difference does it make that after 5 minutes, this particular spot had one trade take place, where if 10 price levels away, there were 1 million trades that took place? That would be more important to me. And those are the kinds of things that we see in OFA that most people, I would say that's the biggest learning moment for people, is that the singular point in time really doesn't make any difference. And that's why we try and treat everything as an event. You'll hear me say that in a lot of the videos, that we're looking at an event. And to me, an event can be described as a range, a swing, a reversal. These are all things that I can't define by time. I can't tell you that because there was a 5-minute period or 7 5-minute periods, that was an event. That's just me stretching across some period of time. But visually, I can look at this and say, this was an entire range. This event might be important. And I can take that information and I can draw more out of it by saying, well, look, when we broke the highs of where all of the important volume was, when we broke those highs, this event is what really mattered. It didn't matter whether it was the close of a 5-minute period. It mattered that we actually saw the event transition into something different. So we went from a range to a swing.
So what was that indicator you just popped on there? That's the volume for that window that you drew?
Yeah, so what we like to think of in terms of OFA, how we like to think of things are that you need to have kind of a wide-angle lens. And then you want to get that a little bit more focused and drilled down. And then obviously we want to drill things all the way down to, as I showed you before, the volume in the chart that are all these little numbers, and it becomes a lot of detail. So when we're looking at a wider scope, we can put any number of these periods together. So we used the example earlier that this transition where the buyers came up and they couldn't get out of here. Let me just zoom in on this so that we're not, I know it's very easy to get lost in a lot of other things on the chart. The buyers tried to come out of the top of this range and they couldn't, and the sellers came back in and drove across. This concentration of selling effort, this is a very natural, think about, and I don't know what your technical background in terms of trading is, but you have things like Elliott wave and people that do ABC waves. There's a lot of things that involve 3 types of motion, where you have an advance, a pullback, and a further advance, and things like that. That's a very natural process in any auction. And I'm using the word auction. That's what a market is. But think about the last time you were at a volunteer fire department pancake breakfast or something, and they were auctioning off something from the local town, or you were at a charity event. When an auctioneer is auctioning something, he's always giving you a higher offer, right? The current bid is whatever price, and he's giving you a higher offer. And as people get excited, that offer accelerates very quickly. And then eventually there are no more buyers. And we have to go through this process of kind of retracing back down. Well, okay, never mind, the bid is this. And then he's going to start offering less. So maybe instead of $100 increments, he starts offering $50 increments, and then 25, and then 5. He's just trying to get a little bit more out of it. That's a very natural flow of capital in anything that works as an auction. And a market is an auction. Frankly, it is. It's just that it's dual-sided because we have active sellers and active buyers. So when we see this effort by the buyer to try and make that continuation, and then it has to retrace and get back down, and then the follow-through is the same, where they try one more time. The auctioneer is saying, one more time, come on, this is for a really important cause, and maybe brings in a couple more buyers, but then all of a sudden that breaks off, and we see the follow-through the other way. Well, when we see this type of thing where we can trace this volume, there was an effort up and then a move down and then another effort to try and get through and then a forceful move down. Rather than looking at these as two individual periods, well, why don't we just put them together and see how all that came together? And look at that. For the two periods, what this is showing us is the concentration of volume. This is a histogram of all of the volume that took place. And so if 100% of the volume took place across all of these prices, this was the price with the most. This is what we call the point of control. And everything that's outlined in red is showing you where the highest concentration of volume was. And then we have all of these outlier prices where, shoot, there was no volume here. There's nothing. If you look at this compared to this, there's almost no volume there. So this is where we would have needed the sellers to follow through, and they didn't. Just like up here, the buyer did follow through. Well, for us to see this and know this, that these two periods can be combined, because again, charts are broken up into time or ticks or volume or price movement, but we can't isolate everything down into these individual periods and expect to get the whole picture. So for me, the more wide-angle lens of this is seeing that whole move from top to bottom. And I would venture to say that if we included the prior one that had the buyers, look, there's still tremendous more activity at the top of this than there is at the bottom, even with the buying effort down here. So this is very top-heavy with sellers that are trying to drive through that can't. And so when we see the effort really clear, that concentration across 3 periods, this is a high that was made, we can see that the buyers have indeed driven through something significant. It's not just one blip on a screen. So we always like to take the approach that if you have the ability to combine things together and view something as an event, and that's what the profile tools do, then you can get the exact same information in a single period by looking at the clusters, or you can even add more colors than this on here. I try to keep my charts very simple, and then drill that even further down into the actual volume information, where again, we're going through that classification process and seeing, here's all this heavy selling effort, and the sellers made one more shot here, didn't they? You can see the prints that came in on the bid side. These were sellers that were trying to stop it, and where? Same place that they did before. Exact same place. In fact, the point of control. And when they did that, they were able to drop it back just a little bit. But where did they drop it back to? Well, even though it's neutral, note the concentration of buyers here. We have 3 levels of buyers basically taking out the offer. And then there's this little cluster away from it. We move up away, but the sellers came in, pushed it back down, and then here is the buyer really engaging and drilling through that. So wide angle, narrow into a period, and then tick by tick. And when we start looking at things tick by tick, that really takes it down into a granular level that, frankly, without a chart like this, you just can't see.
That chart with the histogram is an amazing final piece to what you've discussed so far today, because, again, I'm visualizing it the way I'm doing it right now, and how different a single vertical volume candle with, it's only telling me what it traded during that bar. It's not telling me at all where it traded. What a difference.
Exactly.
Wow. All right, DB, I appreciate your time. Thanks very much. This is going to be fun.
Well, I'm glad you're engaging the process. To me, that's the most important thing is when you see something new, if it's interesting, you have to find something deep inside of it that you find profound. And if you don't, you're probably just going to wander off and go on to the next thing. So I love to hear from people who really want to get their teeth into it, because that's the first step. I mean, you have to engage it a little bit, and once you realize what that information can do for you, you're never going to want to trade blind again.
Yeah, I keep comparing throughout this presentation, answering my questions. I keep comparing it to what I'm using now, and it doesn't even seem like it's the same chart. So
well,
thank you for your time. I appreciate it.
Absolutely. Happy to help.
Take care.